Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today we have been here for 2 minutes before recording, and I can already tell this is going to be just on fire. Today I have with me Frederick Fisher, JD, CCP, 50 years of experience within insurance, and the president of Fisher Consulting Group. And the reason that I finally got him on the podcast is because of his book, the author of Claims Made Insurance, the policy that changed the industry, a deep dive review and history. Frederick, thank you for joining me today. How's it going?
Oh, it's going great, and thank you for hosting me, Tony. You're obviously a glutton for punishment.
A real pleasure. So we have been connected for a while, since 2017, but it looks like I don't think we've ever actually met.
No, I
Uh,
don't think so.
so I added you on LinkedIn back in 2017, just with a quick message about insurance nerds. And then you messaged me about the recent podcast episode with Mark Adi. And you mentioned your book, and I immediately invited you on the podcast to talk about the book. And then we've chatted for, excuse me. Apparently, I'm allergic to you, even at a distance.
I've been called worse.
So, and then we've been chatting for the last 2 minutes. The funniest part, you get on the call for the listeners. You get on the call, and you're funny right away. So I immediately say, a funny lawyer, and you go out of your way to let me know that you've never been a practicing attorney. You've got a JD or not a practicing. I didn't even know that was a thing, that you could get a JD and not practice law. I mean, plenty of people practice for a while and then they let it expire and do something else. But but yeah, I am so curious about you, your experience, this book. Uh, this platform is for you. Well, first of all, El Segundo, California. That is Southern California, right?
Yeah, right by LAX in case I have to make a fast getaway.
Perfect. No better way to. Yeah, I agree. I am right by the Atlanta airport for the same reason. Uh, and that used to be a joke. It's less and less of a joke in the current world that we're living in, especially for a naturalized citizen like myself who was not born here. Things are scary right now. But anyway,
Just keep
so
your passport card with you at all times. If you don't
I
have them, get one.
you're not even joking. I am now carrying my passport with me everywhere I go, and it has a the really nice passport wallet my girlfriend got me for it has an Apple tag on it. So if I get a few feet away from it, because I'm extremely ADHD, I lose everything. It starts beeping at me, and yes, it is a scary world we live in right now. Um, so we're recording June 24th. I'm assuming that Southern California is beautiful as it always is, when it's not on fire. Uh,
Well,
I
LA's never been on fire. Parts of it have, but we got 500 square miles here, dude.
oh yeah,
Um,
gigantic area. So I used to live in Berkeley, up in Northern California.
I went to
My
Cal.
my territory for American Modern was from Visalia to the Oregon border and then all the way out to Reno. So very familiar with California, and then Southern California, I've been to several times, just have never lived there.
I,
Uh,
I I lived in Berkeley. I went to Cal there. I went to college there.
oh, awesome! I'm so envious. It's such an awesome area, and
Then I went to law school in San Francisco, and then when I graduated, I moved down here, which is why I never ended up practicing law.
oh, so yeah, just looking at your LinkedIn, and you're nice enough to have the dates on it, which many people don't have. So, having gone to Berkeley for your undergrad between 68 and 72, that must have been an amazing time to be at Berkeley.
What I
Uh,
remember of it,
and then getting your law degree in San Francisco from 72 to 76. I am downright envious. Are you from California originally?
no, but I wasn't supposed to be born in Detroit either. My family, my mother's family is all from the West Coast. West Coast is my DNA. But after
Okay.
World War II, my dad came home from the war and got his old job back, and that was good news. Bad news was I moved into Michigan.
Oh, was he in the auto industry?
No, he was a sales manager, territorial manager for Brillo soap pads.
And they shipped him out to Detroit.
They shipped him out from Detroit to Detroit from Seattle. I was supposed to be born in Seattle like my brother.
So, how long did it take you to get back to the West Coast where you clearly belong?
15 years. I ended up going to high school in Santa Barbara.
All right, all right. So how did you fall into insurance 50 years ago?
Well, I'll tell you, up until recently, insurance was not a destination employment.
It is still not. It is a wonderful
Well, it's
career.
changing a little bit though, because more and more universities are offering risk management courses, as they
Yes,
should. It's
as they
about time.
should.
But everybody I know, a lot, or I should, most people that I know, ended up getting into it by accident, and that's certainly what happened to me. I intentionally decided to go to night law school when I graduated college because in those days it was very difficult to get into law schools because everybody wanted to be a lawyer. And then when you graduated, unless you graduated the top 10% of your class, you didn't have a job waiting for you. And I didn't like those odds, and I wasn't so arrogant as to think I was going to be in the top 10%. Number two, and number three, I didn't want to work for some big corporate law firm anyways. So but the night law schools, 90% of the graduates ended up with jobs because they were working in the legal industry during the day, either law clerks or what have you. And so that was my target. I actually wanted to be an entertainment lawyer because I had a lot of friends who were artists and musicians. I wanted to protect them from the evil of corporate America. And of course, my first job out of Cal when I graduated with a social science field major was what? What do you do with that? You end up selling life insurance. So, after a few months of doing that, it was like, okay, what's going to keep me in law school is my fear I end up selling insurance, which is ultimately what happened anyways. But what happened was I got in laid I actually got a job finally as a law clerk and for Liberty Mutual Insurance Company's house legal department. So that was an interesting place to be. And it was a wonderful learning experience. We had a partner lawyer there that really believed in training and educating his staff.
Fantastic.
And I really enjoyed that experience, but the pay was terrible. So I ended up going to a different law firm as a law clerk. And then finally the senior partner decided what they needed was a first year associate who could not only do my job, but also go to court. So I got laid off.
Okay.
Meanwhile, I had a friend of mine who was working for this claim adjusting firm. You know what a claim adjuster is, right? Of course, yeah. All right. Well, this was an independent claim adjusting firm, but they specialized in professional liability claims.
Oh,
This
excellent.
is in
Okay.
1975. So it
Mm-hmm.
was like, what's that?
Yeah, that's an interesting job today. It'd be a very
Yeah,
interesting job back then.
exactly. So I interviewed, and because I had legal experience and I was going to night law school, so they figured they could get me. And I'm a hard worker because I'm going to night school. I got
Mm-hmm.
blah blah blah, and it was decent money. They hired me, and all of a sudden, I'm handling investigating claims in the field against insurance agents and brokers and real estate brokers and lawyers, and they did some med mal, although I tended to stay away from that. That was a little too weird, or too close to home, so to speak,
Okay.
and other oddball stuff for Lloyd's. I had no idea this existed, and we were also dealing with the early days of claims made policies. It probably took me several months to really grasp the concepts.
So
But
hold on. So claims made is not as old as the traditional type of insurance.
not then, it is now. But back then, most policies, even professional liability, a lot of policies were still written out in the current spaces.
Why the switch? So
Well, it's very simple. It had to do with the tail exposure because on an occurrence policy, back then the date of the mistake would be the occurrence, not the date of the actual injury. And that was the problem with certain professions. You could make a professional error, but that doesn't mean that anybody's been damaged.
uh-huh, uh-huh.
I could fail to renew your insurance policy. I could fail to give you the limits or whatever it is you wanted, but no one's going to know until you have an accident or a loss. And then
Mm-hmm.
everybody finds out the policy's not what it was supposed to be,
Uh-huh.
which may never happen. Or if it does, that could be several years in the future. And so now the problem was you had to keep copies of all your occurrence-based policies forever. And if you were a professional, you had to keep your files forever as evidence. So in 1964, it's documented in my book, Joe D'Alessandro, although there's some difference of opinion there. It may have started with Victor O'Shinner in the 50s, but
Okay.
that's an open question mark. But nonetheless, D'Alessandro was the first to. He was an underwriter at St. Paul Insurance Company at the time in the MedMal unit, and he was the one that came up with the idea. And part of the reason was the theory was the claim has to be first made during the policy term.
Mm-hmm.
So when the policy expired, the theory was there's going to be no more claims against that policy. And so you could close the books on a policy year faster. You didn't have to keep your policies forever. The insured didn't even have to keep his files forever, was the theory. And it was solid. It took a while to catch on. But in the 1970s, Equity General Agents was an MGU, Managing General Underwriter, and they had underwriting and binding authority for Cal Union Insurance Company, which was a wholly owned subsidiary of INA,
Okay.
which eventually got bought by ACE and then merged and what have you. But nonetheless, that's what happened. Meanwhile, it was starting to catch on. So this was the first real program.
Okay.
And then Employers Re was writing a lawyer's program, and they had both. They had claims-made policies and occurrence policies.
Okay.
Which one do you think was cheaper? Claims-made policy.
Uh-huh. Yeah.
And it all evolved from
carrier,
there.
of course.
And back in those days, the word claim wasn't even defined in the policy. In those days, insurance agent's policy had 5 exclusions. A lawyer's policy had 6. I still have copies of that. I still have copies of those policies in my what's now called my private collection. But that's how it started. It was fascinating work, and I was good at it. And the clients liked me. We represented several insurance companies, and we had TPA authority where we had settlement authority. We even could hire counsel, subject to an approval list, of course, but what have you. So when I graduated law school, the firm had just opened an office in Los Angeles, and they offered me the opportunity of being its manager. So that's when I moved to Los Angeles. And I figured that was a better opportunity than being, because I had 11 job offers. My original theory worked. I had 11 job offers, but they're all from the insurance defense firms.
Okay.
The reason they wanted me is because I had insurance companies as clients. They knew me, though they were hopeful I'd bring business in. Plus, I had good training. I knew how to, take statements like a deposition. I knew how to preserve evidence. I knew how to analyze the facts. I knew how to negotiate settlements. That was all very valuable training. So I had 11 job offers, but I knew that if I took one of those offers, I would end up being a junior associate. I would be taking orders. Whereas if I took the job and moved to LA, I'd be giving them.
Brilliant.
And so whether it was the right decision or not, here we are 50 years later, doesn't really matter. So and eventually I became a partner, and then I bought them out, and changed it. The company became the Fisher Associates Adjusters. We did, and then we expanded the services. Not only were we boots on the ground investigators and third-party administrators, but we got into risk management. We got into loss control. I started writing articles. I mean, you handle enough real estate or insurance agent E&O claims, you suddenly see patterns.
Of course.
And then you start saying, this claim was preventable. And so that's when I started writing articles on how to prevent claims. I was one of 4. We called it loss control and claim prevention. I was not the first. Donald Malecki was. He was writing a monthly article for National Underwriter. And then you had, Kevin Quinley and myself and Curtis Pearsall.
The usual suspects, basically. Kevin's still around. Malecki is a legend over in.
Oh, absolutely. And so I won't say I was the first, not even close, but I was one of the 4. And we called it claim prevention and loss control. By the 1990s, lawyers kind of caught up to the concept and called it best practices, as if they invented it, right? And it took on a life of its own. But nonetheless, by by the 1990s, the business model was changing, and I was on the board of the Professional Liability Underwriting Society, and I was fairly well known in the young and emerging in professional lines and specialty lines industry. And I was on the board of Plus and eventually became president. And it was a good opportunity to switch sides. So I wound down the claim company and I started up an insurance brokerage following a wholesale model and TPA model,
Okay.
and it exploded.
Specifically professional lines focused.
So what we did, we
Perfect.
held ourselves out as experts. We held ourselves out as specialists, which ultimately my corporate attorney said you shouldn't do that. And it was like, oh no, we're going to do it. And we are going to deliver our expertise
what,
every day.
what
And
was
we
this?
did.
ELM insurance brokers?
Yeah.
Okay.
With originally Frederick Fisher insurance broker, a proprietorship, and then we incorporated it and it became ELM insurance
Okay.
brokers.
Fantastic.
And we delivered our expertise every single day.
And you ran that for 17 years, according to LinkedIn.
Yeah, we did. I sold it in 2008. The company continued to operate. I left it in 2014 for a lot of reasons that I won't go into.
Okay.
And but it was private. The company that ultimately owned us, because it got sold like 2 or 3 times, was private equity driven. As far as I was concerned, I could have been selling vacuum cleaners door to door, and they wouldn't have cared as long as I was putting money on the books.
That's the way private equity works. Absolutely.
Yeah, so it was like they didn't care about any of the things that we did that made us so good at what we did. So I bailed, but I'd been doing expert witness work, starting in the 1980s. Very little. I mean, I had businesses to run, so I couldn't focus on that.
And then
But
it looks like you did classes for, or you have been doing classes for the Academy of Insurance
for a long time,
for
yes.
14 years now, since
Yep.
2010, which means that you're definitely also friends with Bill Wilson and nowadays with Patrick Wright.
I
Ray,
know those people, yeah.
of course.
Bill's also a member of the American Association of Insurance Management Consultants.
Of course. Uh,
I'm a member of that too. I'm
fantastic.
still involved with Plus. I was chairman of the Insurance Agent and Broker Committee for the Professional Liability Defense Federation.
What is the Claims College?
The Claims College is sponsored by the Claim and Litigation Management Alliance, CLM,
Okay.
and they created the Claim College to be able to do very specific training in a very intensive week. It's like 3 or 4 days, and there's 3 parts to that. So you have to go 3 times. You have to go 3 times because you have to take the beginning, intermediate, and advanced courses before you're certified as a certified claim professional. I help write. They also have various schools. They call it the School of Workers' Comp, the School of General Liability, et cetera, and property insurance, for instance. And then they have one for professional lines. So I knew Larry Joannis, who was on the board, and he invited me to join the advisory committee. And then he asked me to be involved in the claim course material for the School of Professional Lines. So I contributed to writing and authoring all 3 courses: the beginner, intermediate, and advanced. I also taught them over a 3-year period and wrote the final exam as well with Sally Coombs. And that's that, and it's still ongoing. And because I helped write the courses and taught them and whatever, they designated me a member of the CCP.
Fantastic. And Fisher Consulting Group. So you're a consulting firm. Who do you consult for?
The majority of the work that I do that's billable is acting as an expert witness. Most of the cases I handle are against insurance agents and brokers. I also have handled bad faith cases. I've handled some attorney malpractice cases, but I have to be very careful with that. And miscellaneous stuff. I mean, if I feel I have the expertise, I'll be happy to take the case. If I don't feel I have the expertise, then I'll walk away from it. I say I'll decline it. When that's the key. I'm just not taking cases to make money. I'm taking cases I feel I can add value.
Makes
I'm
sense.
very honest about that.
Makes
Uh,
sense.
so,
So,
but we also do risk management reviews, and I've
okay.
had several clients that have come to me with their policies and said, "Am I really covered here?" And I have to be careful. Again, I can look at it as an insurance broker because I'm still licensed. I can look at it as a claim adjuster because I'm still licensed. But ultimately, I have to have disclaimers about you have to consult with, competent coverage counsel in your jurisdiction. But
Mhm.
here are my thoughts about the policy. And, I pride myself as a broker. I had a reputation as being a coverage terrorist. And I relish,
Coverage terrorist.
yep, coverage terrorist. I want my client protected. And I'm not asking him to be protected for something that, this policy shouldn't cover. I'm asking for the usual and customary stuff to be covered. And you'd be surprised how bad the policies are today, mostly due to absolute exclusions.
All right.
And so,
So
no, today you cannot count on being covered for the kinds of things you normally would consider to be covered for.
this is scary to say the
It
least,
is scary,
especially for
tough,
tiny little publishers like.
but there's another part of this,
Uh-huh.
and I'm convinced that it's by design. This is not unintentional,
Uh-huh.
or it just didn't evolve this way on its own. The other part of the equation is that 37 states don't require an insurance agent or broker to advise you on anything. They have no duty to advise you on anything.
That is absolutely insanity. Um, why do we even get them licensed if they don't have to advise?
Right.
Um,
And so they're leaving it up to the insured to know more about their needs insurance wise than the person who's licensed and trained to sell it.
that is so wrong.
I agree with you. Now I have to be careful here. I testify as an expert witness in these matters. There are 37 states that follow what's commonly referred to today as the order taker standard of care. And in those states where I've been retained, I will adhere to the standard of care as it exists in that state. I will not offer my own personal opinion as a professional one. I won't do it. It's inappropriate. Now, do I agree with the order taker standard of care? No. But will I
So,
testify that that is the standard of care in that state? Yes. And I will
so,
do it and I in a non-advocacy method because I don't believe experts should be advocating anyways. But
so,
that's I have to be careful with that.
so the book, Claims Made
Yes.
Insurance, the policy that changed the industry, a deep dive review in history, came out almost exactly a year ago, June 18th of last year. Easily available on Amazon, paperback, hardcover, even Kindle Unlimited, you get it for free, and audiobook. That's interesting that you made the audiobook. So so who's the book for? Is it for agents? Who's it
I
for?
Well, first of all, it's for anybody in the insurance industry that's involved
Okay,
with claim policies.
perfect.
But more importantly, I wrote it for the consumer. And so I've laid out the history and the problems and the current problems of the policy forms in a manner that's easy to understand because I want the consumer to read it. And most of the consumers are going to be relatively sophisticated anyway. So they're going to be lawyers and insurance agents and brokers and real estate brokers and architects and engineers. So, most of the people that we buy the policy are highly educated, sophisticated anyways. But you'd be surprised how often they don't get it. And they have to be very careful because these policies are so tricky today. And by design, it's intentional. I've got copies of articles lawyers have written where they've actually said, hire competent coverage counsel so we can help you draft language that will help you avoid paying claims you normally would pay. And I'll give you a good example of it. Most of the policies today have evolved into what are called claims made and reported policies,
Okay.
which means not only must the claim be first made against you during the policy term, you've got to report it to the company during the policy term. Or within any automatic extended reporting provision. Okay.
Mm-hmm.
There's a gotcha there too, but I'll get to that. Let's go back to the claim. It wasn't until the early 1980s that the word claim was even defined in professional liability policies. And so there's no standardization of that either. But one of the most common definitions of the word claim in a claims made and reported policy, remember, claim must be first made against you during the policy term, and you got to report it to the company during the policy term, okay? Most commonly used definition today is a claim is defined as A, a lawsuit, B, a written demand letter, C, the commencement of an administrative or governmental proceeding against you, period. Have any problem with that?
I'm sure there is.
But the answer is no, you don't have a problem with it.
Yeah, no, I don't know enough to have a problem with it. Yes.
All right, here's the problem with it. It's a claims made and reported policy. You have to report the claim to the company during the policy term as well. There is nothing in that definition that requires you know about the lawsuit. It doesn't say a lawsuit served on the insured. It doesn't say a demand letter received by an insured. It doesn't say the commencement of a administrative or governmental proceeding with notice received by the insured.
Yeah, so I might not know.
Exactly. So what do you do in the event you're a director and officer of a company that's under investigation by the feds and they convene a federal grand jury in secret? The grand jury, of course, upon the commencement of that grand jury, your policy is already triggered. You may or may not even know about that. And then the grand jury issues an indictment, but it's sealed. Your policy's triggered. The clock is ticking. You don't know about it until they serve you. And that could be after the policy expires. 3 states already have ruled. Too bad. Coverage denial upheld, which is kind of surprising. Whatever happened to the defense that, the contract's impossible to perform?
Is there any way to defend yourself against that possibility?
No. And the reason being is that in the Constitution, the United States Constitution, has upheld the sanctity of the written contract. So if the contract is clear and unambiguous, it's going to be enforced. Which means all these maxims I grew up with, that insuring agreements are to be broadly interpreted and exclusions narrowly construed, out the window. Insurance is a contract of adhesion, unfair bargaining position, out the window. Reasonable expectation of the insured for coverage, out the window.
I don't know what to say. That's crazy.
And I now, my next book, and I've already we filed for trademarks on this.
Excellent.
A preliminary approval has been given. There's no objections and nothing even close. But I call these things the gotchas that'll get you. Which is we're not claiming trademark on that phrase. That will be the title of my next book, and you'd be surprised how many there are.
So the next book is going to be a deeper dive.
Won't be dealing with claims made policies. It'll be dealing with the insurance policies in general.
Okay.
Even your homeowner and auto policies have gotchas that'll get you. Your general liability, excess policies. Did you hear about the Pharmacia decision?
Nope.
You've heard of Pharmacia Corp, right? Big pharmaceutical company, huge multi-billion-dollar company.
I might not have.
Well, they're huge.
Okay.
You can imagine the towers of excess coverage they had in the stratosphere. Now, as you know, you cannot commit to a settlement without having insurance company's permission, even at this level. And you can imagine that Pharmacia is probably self-insured for the first 5 or 10 million to begin with.
Makes sense.
And then they buy excess coverage into the stratosphere, 10, 20, $30 million layers at a time. So they enter in first, they had to tell their insurance companies, we have an opportunity to settle this for $207 million. We need your permission. They all gave permission. The insurance company at the $160 million layer had a 1-sentence condition in their policy built into the form, not an endorsement. And this wasn't some fly-by-night company either. This was Twin City Fire. That's Hartford. The sentence had 2 parts to it. The first half of the sentence said, all underlying insurers must have exhausted their limits, which I would expect for an excess carrier. I have no problem with that. It's the second half of the sentence that just flipped me out. I'm still reeling over it. And it was the second half that said, and all underlying insurers, not the policyholder, mind you, insurers, had to admit liability. Yeah, exactly. Admit liability. And which they hadn't. So the company said, we're not paying. And that was upheld. But think about it. Everybody above that layer, too, was out for the same reason, failure to maintain the coverage or underlying limits weren't exhausted. So they're out, too. So pharmacy had to cover the difference between 160 and 40 and 207 million out of pocket, in addition to their $5 or $10 million self-insured retention to begin with.
And on a technicality, on like an absolute technicality.
Uh-huh. Toast. And it turned out that wasn't the first time that policy had been challenged. They had Twin City Fire had won a similar case in 2012 in New York, and the New York appellate court also enforced it. I didn't see any lawyers writing up that decision back in 2012. They sure heck did 2 years ago, and that's when I just fell out of my chair when I read it. I couldn't believe it. Talk about a gotcha that'll get you. Who admits liability? Certainly not an insurance company. But that was the condition, and it was upheld, clear and unambiguous. Question is whether they had the ability to even sue their insurance broker for
that. That is crazy. I keep.
Here's what happened, though.
Okay.
Lots of law firms, of course, were writing articles about the case, and I'm getting them. I subscribe to a number of places where I get these feeds, including directly with certain law firms that are very prolific in their articles on case reviews. And sure enough, this one law firm does a very thorough review. It's about 3 pages long, a thorough review of the case, the decision. It was the last sentence that got my attention. And that's where they said it would behoove insurance companies to hire knowledgeable coverage counsel to help you draft language so as to be able to avoid paying claims. What kind of frickin' policy is that?
Unconscionable.
Yeah. Now, whether or not you want to take the position that this is another example of the supply side screwing the consumer, what have you, we can have that conversation. But one thing's for certain: suppliers are also consumers, and they're getting burned too, including United National. United National Insurance Company got burned on an absolute exclusion in their E&O policy. Yeah, some insurance companies buy E&O insurance, and they had an exclusion they had an absolute exclusion for pollution, but they write pollution insurance for their policyholders, and they got sued for bad faith. They turned it into their E&O carrier, and their E&O carrier denied coverage. We don't cover any claim arising out of any pollution.
Well, now
they disclosed, they also disclosed their premium volume for that line of business. They got charged premium, and then the carrier had an exclusion in it. So the real question is, what supplier wants to take one for the team this year in the multi-millions of dollars to make sure that we can preserve the fact that we're writing language so you don't have to pay anything?
I go back to Bill Wilson. And insurance is supposed to be insured, right? His 2 famous lines: RTFP, read the effing policy, and number 2, insurance is supposed to insure.
All right, so let's talk about reading the policy. Are you going to know that your cyber liability insurance policy will not cover social media fraud in one particular state, but it will in another? So reading the policy isn't going to do you any good. And if you want your attorney to review it, he's going to have to do a 50-state review. There was a law firm that actually wrote an article about that. When should you have your corporate counsel review your insurance policies? How about before you sign on the dotted line? Okay. Then they list out 15 or 16 different policies a corporations buy today. and you're going to do a 50 state review on all of them, and you probably only have 2 weeks to do it, because if you're on renewal, most renewal quotes, you don't have that much time. Then you're going to have 18 policies with a 50 state review done by your counsel. Good luck. And maybe you're out to bid. Maybe you got 3 or 4 quotes from different insurers. It's impossible. But that's what's happening today. And that's why I'm proud to be called a coverage terrorist. And I'm going to tick off a lot of people when the Gotcha's That'll Get You comes out. And I don't care.
So the first book is published by Wells, so
Yep.
Insurance Journal, et cetera, et cetera, et cetera.
Yep.
And it's an easy read, 193 pages.
17 5-star reviews.
Yeah, no, it looks fantastic. Paperback's only 29 bucks. Hardcover 39 bucks if you wanted to look nice in your office behind you. So by the way, thank you for publishing it with Wells, and it looks beautiful. Thank you for publishing it with Wells and not with Ermi, so it's not $100. And I said that lovingly. I like them a lot, but they do overcharge for their books, at least from my perspective.
Careful, I'm still senior technical advisor for the professional liability insurance manuals.
So
I love Ermi.
Yes, Ermi is a fantastic organization, fantastic, and Jack and his daughter are both fantastic. Is the new book also published by Wells, and when is it coming out?
The research has been ongoing for years. I have all these articles, and to get it all in the spreadsheet that could be broken down by class and state and carrier, whatever. I had to turn it over to some programmers to go through and go through the source, following a format that I've perfected over the years for that purpose, and it's almost done. So the research is almost all organized, and once that research is organized to the level I want it, then it's just a matter of sitting down and dictating it chapter by chapter by chapter.
All right.
So I figure the manuscript may be ready by the end of the year.
All right. So sometime next year, probably we'll actually get our hands on it. Fantastic.
Yeah. And I probably will let Wells Publishing have that one as well. That's undecided yet, but we'll see. But probably. I mean, my relationship with them and Ermi and others goes back so far.
Oh yeah, no. They're both fantastic.
And I know Patrick Wright very well, and I do it through the academy, of course. And so there's a high probability they'll get it. They're aware of it, and they're also aware that it's taking a little bit longer than I had hoped. But the problem was getting the data together.
So I'm assuming this will not be a 193-page easy read like the first one. It sounds like this is going to be more a 400-page behemoth, like
it could be.
Collide.
It could, and try and keep it interesting and funny. It's not going to be. Is really going to be a challenge. But I was able to do that with the book on claims made. It's not technical.
Well, you're clearly a funny guy, like from the moment you got on the call. So if anybody can make justice to this and make it readable for a normal human and interesting, it's Bill Wilson and his ilk, and you definitely fall into that glorious group. So yeah, super interesting.
It'll be the same style. It'll certainly be the same or similar style that I wrote claims made.
Fantastic. So for the listeners, for anybody that works in the claims-made space, you really owe it to yourself to read this. By the way, did I mention
a consumer with a claims-made space?
And they're not the ones that listen to my show, but yes, the consumers that buy.
Let me tell you how far this has got. Corporate D&O, employment practice, fiduciary liability, to cover you for employee benefit programs. Okay. Cyber liability. These are all C-suite coverages, all claims made. And if your company's doing a service to others for a fee, claims made.
So basically, all risk managers should read this, and probably all CFOs.
Yep. And insurance brokers.
Oh, most definitely.
Yeah. That's why I wrote it for the consumer. They need to know what they're buying and where the traps are. And believe me, there are plenty of them. And it's intentional. And then when you add to it, absolute exclusions, I've been on a warpath about those since 2009. And let's not forget that today's claims made and reported form can have as many as 5 conditions to trigger coverage. 5. The claim must be first made against the insured during the policy term. The claim must arise out of a wrongful act or error in omission that is not prior to any retroactive date. The claim cannot be prior or pending to a continuity date, or also known as prior pending date or first coverage date. Okay. Claim must be reported to the company during the policy term or during any extended reporting provision. We'll get to that last. And finally, it cannot be related to any other claim or error that you previously reported under another policy, even with the same insurance company. So let's go back to the claim must be first made and reported to the company during the policy term or any extended reporting provision. So stop right there. Page 1 of the policy says that. Go to page 14 or 15 or whatever, where you're going to find the extended reporting provision language. And that language usually starts out with, if the company or the insured should cancel or non-renew, then the insured shall have another 10 days, 15 days, 30 days, 60 days, whatever, to report a claim that was first made prior to the expiration of the policy. Okay, fine. What if they renew? There's no such thing as continuity. So that means that the policy, the opportunity for the policyholder to report a claim where he's served at the last minute, the window slams at midnight. You don't have 30 or 60 days to report it. That only applies if you don't renew. Talk about a gotcha that'll get you right there. And you're not even off page 1 of the policy. They have to find that. How do you like that?
All right. All right. Luckily, would for the listeners, before we start recording, Frederick asked me what I knew about claims made policies, and luckily, I knew very little. Or luckily, I knew that I knew very little, because now I know that I know very, 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 very little about claims made, as I've never worked in that world. This is very, very interesting stuff. Very, very interesting stuff, and with massive, massive consequences.
Yes. Insurance companies have forgotten how to be insurance companies. Now they just see massive cash flow and they want to try and keep it. And they do it intentionally. So, I don't understand why the NAIC isn't looking into any of this. And the one thing they are scared of, though, however, is 2 things. Artificial intelligence and private equity companies coming into the insurance industry. There's even some talk, and I won't mention names now on the source of this, but there's even some people out there that are finding out that capital surplus, which is that capital that's supposed to be totally unencumbered and is used to support underwriting and pay claims, may be encumbered, because at the parent company level, they may be borrowing money from a variety of sources, and then the money they're borrowing is being used to beef up their capital surplus. So it's not unencumbered.
Right. So as 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 a CPCU, I feel that I must give the disclaimer that I'm just the interviewer here. Insurance is supposed to insure. I will lean on the Bill Wilson teachings. Insurance is supposed to insure. Um, and we are supposed to be an industry with a noble purpose, a noble mission. Um, and wherever that is not being true, that is something that we should all be fighting against.
Yeah. I'll tell you something. We already just mentioned the order taker standard of care, right? I can tell you from personal experience, what I'm seeing is that a lot of major brokerage houses are slamming it down the throats of their salespeople. Don't give advice. Don't give advice. We can't be legally responsible. So how's that working out for you? The financial statement for some of these companies, of course, have to be filed with the SEC because they're publicly traded. And I won't mention names right now, but a very, very, very big insurance brokerage had $355 million in reserve on their financial statement for the purpose of paying malpractice cases and lawyer fees. 355 million. So it's like, okay, how's that order taker standard of care working out for you? If they gave the advice, if they actually took the time to, work with their insureds to provide the proper coverage and then documented it. So if somebody says, no, I don't want to do that, fine, document you've given the advice and they refused. Guess what? I'll bet you that 350 million could be reduced by 2/3.
In personal lines, we have plenty of agents that are little more than order takers.
That's
But
right.
in commercial lines, that is
Same.
shameful.
Unless you, the exception is fairly universal. If you hold yourself out as an expert, if you're paid to do a risk management review, in addition to the commission that you might be earning, okay, or you misrepresent coverage, then you're held to a higher standard of care. That's why you'll see websites change. Oh, such and such a company holding themselves out as experts suddenly are acquired by a bigger company, and next thing you know, they've got a plain vanilla website. No more advice. No more holding themselves out as experts. No more. Oh yeah, we're going to custom tailor our your coverage for you. We're going to meet with you and determine all your needs and custom tailor, and then they don't do that.
So what's your value add as a broker?
What?
Uh, like in a world where we can quote our own insurance through a million different platforms, if you're not providing me advice and making sure that I'm properly covered, what the heck is your value prop?
Exactly. I mean, some of this is in the claims made book. It'll certainly be in the new one coming out. And of course, I've written a lot of articles on this. For instance, I'm a member of the Professional Liability Defense Federation. This is an organization of defense lawyers. They're not only the defense lawyers, they're defending professionals, including insurance brokers. I was, vice chair of the insurance broker committee. I was co-chair of the insurance broker committee. I understand the standard care perfectly. And then I turn around and I publish an article called One River, Two Currents. They published it. I've got to hand it to the PLDF because in that article, I discuss as a personal opinion only how the order taker standard of care evolved and how wrong it got and how the reality of the insurance industry went into another direction. And the two are irreconcilable. I can't believe they published that, but they did. I'll give them a hand. I'll hand it to them.
I mean, they needed content. I've been there.
Well, they needed content that makes sense.
Yes.
Publish anything. No, I love being a member of that organization. I'm looking forward to the annual conference in a couple of months. But at my age, I don't care. I'm going to speak my mind and I'm going to voice my personal opinions. Professionally, again, for the record, professionally, if I'm in a state where they follow the order taker standard, I will testify to it. Absolutely.
Frederick, it's been a pleasure and super interesting. I need to pick up your book, which I apologize that I didn't do ahead of time. It's been a crazy travel season, but I do need to read it because that sounds very interesting. Looking forward to the second one. For the listeners, Frederick's LinkedIn is linked below in the show notes. Also, the Amazon link to the book is below in the show notes. And keep an eye on Frederick's LinkedIn for announcements about the second book sometime next year, likely published by Wells. And I feel that this is going to be one of the more controversial episodes we've ever published. So I should say the disclaimer that the opinions
Opinion.
voiced herein are the opinions of each of us, not reflective of insurance nerds, not reflective of the CPC Society, not reflective of Top Hat Recruiting, not reflective of any other of the other businesses that I'm involved in. Uh, but definitely a super, super interesting conversation. Thank you so much for your time today.
Thank you for having me, Tony.